Welcome to the Tidecrest Triple 3's. Each month we spotlight 3 numbers impacting the capital markets and 3 news stories driving investor sentiment, all in 3 minutes. Let's dive in. First, 3 numbers: labor market, inflation, consumer confidence. Labor market. The job market appears to be losing steam. Due to the government shutdown, more on that later, we don't have official numbers on September yet, but the alternate sources show another sluggish month. The last official numbers from August showed the unemployment rate increased to 4.3%, the highest figure in over 8 years. Additionally, June's numbers were revised downward and ended up showing 13,000 jobs lost, the first contraction since the pandemic. The labor market's resilient, but momentum is softening, raising questions about how much longer consumers can keep driving growth. 2. Inflation. Last reading on inflation is that it remains moderate at 2.9%, yet up from the cyclical low of 2.3% in April this year and above the Fed's stated target of 2%. Upward movement away from the Fed's goal has caused some concern, and Fed officials have been vocal about the risks of easing policy or lowering rates too aggressively, creating pause when forecasting anticipated future rate cuts. 3. Consumer confidence. Consumer confidence fell sharply in September to its lowest level since spring. This metric matters because consumer confidence drives spending, and spending drives nearly 70% of all U.S. GDP. Keeping an eye on this data point going into the end of 2025. Now for our 3 stories: government shutdown, anticipated Fed rate cuts, proposed bank capital rules. 1. Government shutdown. October began with a partial government shutdown after budget talks collapsed. The direct impact may be limited, but the disruption delays data releases, creates uncertainty, and chips away at investor confidence. 2. Anticipated Fed cuts. Markets are now pricing in another Fed cut before year-end. Slower hiring and weaker confidence give policymakers room to move. However, inflation creeping up could give the Fed pause when considering how aggressive to pursue future rate cuts. 3. Banking capital rules. Regulators signaled a potential major overhaul of U.S. banking rules, which aims to cut red tape and reduce capital requirements. Supporters say the excess reserves could better serve the economy through lending, while critics say that chipping away at capital requirements is dangerous and can leave the industry vulnerable at a time when the outlook for the U.S. economy is growing cloudy. In closing, that's the Tidecrest Triple 3's for September. 3 numbers, 3 stories, in 3 minutes. We'll be back next month to track what matters most. Thanks for watching.
Boom, 3 minutes.
Was it pretty close?